All right, guys. So something I get asked pretty often is why do I chart the indexes, and how do I use them, and how are you guys supposed to use the information that I'm giving you? So you can use it however you want, but I'm going to tell you why I chart them and what value I see in them. So I see the indexes as being able to be used directly towards a USD driven pair. So I'm pretty much giving you the analysis on UJ, UC, UCHF, GU. There's the reason that I use those, and I always reference the NZD USD. Why would I say that if I'm talking about the indexes? So let's go. Let me show you. The reasoning behind it. Let's go. Let's do exactly NZD USD NZD. Okay. Now I don't know if you all know this, but you can overlay other charts onto it. So the NZD index is CXY. Did you guys see that? See what changed? Not very much. What happened was this wick right here popped up. This wick is in almost all of them. It's on all the indexes. I don't know what happened here. I haven't dug into it, but whatever this giant spike was, the USD must have had it also, because whenever you look at, see, it disappeared. That means that they countered each other out. The two indexes did. So they are very, very, very similar. They're not the exact same, but they are very, very similar. So what does that mean? Use it. Use it to your advantage. You can use the NZD USD chart to pretty much guess where the NZD is going to go, and that's where I see a lot of value. And that means, USD, and they're not all the exact same, like the exact same direction. Like this UJ, if I put on the JXY, it is a mirror image, and it goes the other way. Here's that same spike I was telling you about. So I feel like, you get a different perspective, especially on the ones like this that are flipped. Whenever they're inverted, I think UCAD is the same way. Let's get this. UCAD is the same way. All right. Now let's put on the CXY. CXY. And they are inverted. There's a spike again. See what I'm saying? So, but the reason it's not on this one is because the USD must have done it also. So that's where I see a pretty big value. I'm giving you guys pretty much the analysis that I see on all of the USD driven pairs. So the only one that wouldn't fall into that category would be like EU, because it does what it wants. The euro has been consolidating. The dollar has been pretty much consolidating too. Well, we've still seen some decent moves in EU here lately, but for the most part, it's consolidating also. So this is a pretty big value. And then the other value would be whenever you can find two of them that I say one's going up. One looks like it's going up to me, and if you agree, and I look at another one, I say this one looks like it's going down to me, and then if you agree, then those are the big pip movers. So like when I took let me show you something real quick. So the indexes also, let me show you this on tradingview.com. They are they're not the greatest, because whoever they get their feed from, it looks great on the weekly, but you take it down the daily, you see gaps. So there's gaps, and then, if you take it any lower than that, it's just like, what am I looking at? Big old gaps. So this is where I fell into my TD Ameritrade account. I traded stocks. Wanted to be a day trader until I found Forex, and I found out how much way better it was. But I was over here with them, and I just happened to find the indexes one day, looking up in the, looking for different. Found all these, and you can take these down to the 1 hour, and look how smooth it is. No giant gaps. It looks just like a regular chart. It looks, great, fluid. You can see everything. So this is why I use my TD Ameritrade Thinkorswim platform to do all of my charting, because it's fluid. And the whole reason I'm even in here was because of the stocks, and because they gave me like 300. it was like 300 free trades or 600 free trades, something like that last year. Whenever I signed up with them, I don't know how much you had to put in. I think I put like $28,000, something like that in my account. And they gave me a certain amount of free trades and told me that you had to keep a certain amount of money in there for at least a year. So I didn't think it was a big deal because I thought I was going to be trading stocks. Well, now that I trade Forex, I realized U.S. regulated brokers suck. Crap leverage, the first in, first out, no hedging. You know, I don't like all those. Those are pretty much my biggest pet peeves about U.S. regulated brokers. So I trade with FinPro. If any of you know me, I've got the FinPro room. That's where I trade. But because of my money being trapped in here, I have to have $3,000 in here at all times. So I'm constantly withdrawing all the way up to $3,000. But I want to let you know that before I show you anything else, because I'm fixing to show you that the Japanese yen index, as we know, fell and hit the 200 SMA on the weekly. And now it hit it. Right when it hit it, I want to show you this is where opposing pairs, like I'm talking about, what has the euro been doing? It's been consolidating. It's been doing nothing. To me, it looks like it's fixing to fall off the face of the earth. That's what I see. This many tests on that trend line, riding it up like that, it's fixing to hammer down through it. Obviously, the thing to watch, like I said, this week is on the daily, the 50 EMA, holding the price action down. We see a clean break and close above it. That's what we need, a break above it on the daily to know that it's actually going to start running, or we're fixing to see a pop up and then break down below and a close below this trend line. This is where it's in a very, very, very tight range right now. The euro is. So, but the Japanese yen I know is going up. So I got in a EJ sell. Now this is where I'm fixing to tell you guys a little bit more about my my strategy. More than just the indexes, because I want you guys to see what I see when I was doing it. So I was trying out, that was a pitchfork. But regardless, what I really saw with the daily, I saw this 200 SMA coming up, okay? And it rejected off of it, and then it continued. I think I got in this one at like 131 or so. I got in this one a little bit late, 131.3. So I got in this one a little bit late because I wasn't sure about the Japanese yen running like it did. And then my other trade that I'm very well up in, what, 320 pips, 330 pips. This is the GJ trade that I called, and this is where opposing pairs are money makers. So I went to the GJ chart and I looked for anything that would tell me this thing's fixing to drop or pop, and I drew a nice trend across these wicks. Nice trend line wick, top side breakdown. Bottom side touch, we're heading back up, we're running hard, gunning for this. This is on the daily time frame, so it's gunning. This is a nice long run up, and I drew that trend line, and I was really thinking it's either going to try to hunt for the two, because it showed a little bit of respect back here to it. So I was thinking it might come all the way up to the 200 SMA. If not, I wanted to get a perfect wick entry, but I think I put the sell limit in the room in Cryptos at 149.5, and then I told everybody I was market executing at 149.1. That's where I got in on my FinPro account. And this one I didn't pick it up till almost, a little bit below 149. I remembered, oh man, this thing is going to go for a long ways. I'm going to go ahead and make some money on my TD account. So I mean, I'm up. This is it was a $3,000 account. I'm up 10% on this trade alone. But this is what I'm looking for. I do use moving averages, and because of the power that I see in them. But I also use trendline breaks and touches, and just keep my eye open on stuff like that. So I feel like I need to let you guys know how I analyze, also, so that we can try to get on the same page. Or if you analyze a different way and you see the same entries or exits, I mean that's just another confirmation to me. That's where I like all the different trading styles. That's why I'm in so many rooms, is because I can go through and talk to a bunch of different people that think a bunch of different ways, and but we all have the same common goal, and that's to be as successful as we can trading, to better our lives, provide for our families, and 95% of the people that I've met have been willing to help other people. And I'm going to show you guys something that brings me back to something real quick. I want to show you guys, if you guys aren't familiar with this teacup strategy that Lou Zaldo he teaches and trains people on. It's a very simple strategy, and it works very good. It works very well for him. Most of them are sell positions, and this is something that I want to show you guys. That is a very, very, very awesome thing that I learned from a guy that I don't actually have any respect for. I met a guy that was very arrogant. He makes good money, and he thinks that everybody was beneath him. But I did learn something in there, and I want to share it with you guys because I found it to be very, very useful. So if we zoom way out on this thing, I mean this is a weekly, so I'm just going to show you because I found this chart earlier and I said, oh, that looks like a big old giant teacup. So this is what reminded me of his strategy. He looks for it to come up and then he sells it off the top or near the top, and most of his positions are sells. This is a pretty cool trick on TradingView that you can have the chart inverted, so that you can you put the one dash before it, and look at that, it flips the chart over for me. Gives you a different perspective. You see different things different ways. This is the way our eyes work. We see different lines that we might not have seen before, and different patterns, different anything. And that's where I found that that is pretty cool. I learned that with the indexes because of ones like the CAD index, how it's inverted, and the Japanese yen. I do see different patterns on those indexes than I do on the actual charts, and that's just the way that my eyes catch different patterns, and I'm pretty sure mostly everybody's like that. So that was something really cool I want to show you guys, and I think I covered pretty much everything I really wanted to cover. If there's anything else you have questions about, as far as like how I chart, how do I find confirmation, what do I call a rejection? I guess I should go into that too. Let's see. Let me show you guys a powerful one. EU. All right. Oh, how long is this? Okay, so let's go to this real quick. So the moving averages that I use are not the same ones that everybody knows that I met J Rock back in like February, and he had a real small room, and it grew to be giant, and his moving averages are what pretty much drove that growth. Is that he showed us the power of moving averages. Now I don't use the exact same moving averages he does. It doesn't mean mine are any better than his or his are wrong. We just use different ones. We see different values and different moving averages. So he uses SMAs only. So this red 200, the green is his 100, and the purple is his 50. Those are the only. Oh, and the 5. Those are the only ones that are on this chart right now that he uses that I use. Now you go into a lot of other rooms, and like I think I've got a strategy on here on this one right now. It's the EMA strategy I learned in one of the rooms. It's a really great strategy. He uses the 200 EMA and the 50 EMA. I already had those two on there before I met him, before I saw his strategy. He's got a great strategy. But the 200 yellow is now my 200 EMA is yellow, and the 50 EMA is his orange one. Then I've been, like I said, I've been using this one because I found value in it all over the place. But the one that they call the weird one, I call Big Mama. Messing around with J-Rock, I call it Big Mama. Is the blue one. The blue one is actually the 144 weighted moving average, and it's a strange one. Not very many people use weighted moving averages, but I want to show you a magical entry that I got thanks to the 144 weighted moving average. I picked that up. I built the room a while back after we got FinPro was rolling pretty good. I found a couple people there that like to scalp because we got tightest spreads, $2 commissions. You can't beat it. Scalping is like it's as easy as you can possibly imagine it would be. So I built the room for FinPro scalpers, and we were looking for different strategies. We found one that was like 5 over 144, like a 5. I don't know if it was EMA or SMA or what it was now, but whenever it crossed over the 144 weighted moving average, I didn't see very much success. I didn't see very much consistency in it. I didn't like the strategy. We had a guy in there that tested out for a while, and he had good results. Then he had hit or miss, so it was like nah. But while I was trying to test it out, I was finding different charts that the 144 weighted moving average actually did show some pretty decent respect, and that's where I wanted to show you guys that I've had it on there for a while now. Okay, and this is the part of my strategy where I look for when I say something looks overextended. When I do use RSI, when I say that something is overextended, I mean it is buried in the RSI and it's been there for too long. So on the weekly, we're still plenty good as far as the downward momentum goes. So we've got plenty of room on the RSI on the weekly, but if we go down to the daily, that's where I was at, was whenever this giant move happened, this huge long move. It buried the RSI. Look, when we were way up here, and then it just kept on digging, pull back, dig, 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 dig. Whenever you see a long move like this is the daily. This is a long time. When you see something like this, there's usually a move. There is a finish line. There's always a finish line whenever I see something that's way overextended. And that goes all the way to 1 hour, 4 hour, any of them. If they're way, way, way overextended, I usually go to the next time frame up and I look for one of my major moving averages. And if there's a big gap or something like that, it's got a target. That move has got a target. That move has an end coming, because the bots and the market makers, they use moving averages. To me, it's obvious. And the bots, I can show. I've shown people on the 1 minute. Whenever I scalp on the 1 minute, if there's a hard impulse move, you can scalp on the 1 minute, 2-3 pips every single one of these moving averages. Every one of my majors, you can find 2 or 3 pips when it hits it. It hits it, falls just a little bit, and then it'll go back up, and the next one fall a little bit. I mean, it's like clockwork. You don't know how far up it's going to go, but I can almost guarantee you every one of those things it hits, it's going to drop a little bit. So, anyways, I'm looking for a giant rundown, and then I go over to my weekly. I see this RSI is buried. Go to the weekly, and I go, okay, where is this bad boy going? We've got the 200 EMA way up here. Got the 200 SMA way down here. That is a giant gap. I have this moving average on, almost nobody else does. And hopefully after seeing this, maybe some of you guys might use it, might not. I don't care. I'm going to keep on using it because I can ignore all the ones that to me aren't relevant. Any one that's not relevant, nothing is happening on the price action, I don't pay attention to it. So what I saw was that this thing was running down hard, big old gap between them. The only thing that's going to slow momentum is going to be this 144. So I put a buy limit at 1.152, and that's about where that line is. I think that line's like 150, like that's close enough. But look at that, no drawdown. I got out at 117. I didn't ride it all the way up to the 50 EMA. I wasn't sure if it was going to go past the 200 EMA. I didn't want to take the chance, so I was happy with 180 pips, and I got out. So, but anyways, it was hard run like that. You gotta look for a finish line. I found this finish line right here, but I don't guess. A lot of people that use other moving average strategies, J-Rock has great success with his, but he knows how to use it better than anybody else because it's his strategy. I've had people say they don't know which one it's going to stop on, and that's because they don't know which time frame to use it on and stuff like that. You know, you have to know the strategy you're trying to use. So I go how I use the moving averages is if I see a hard run like this and it's going to moving average, obviously the only thing I have to reference on for that moving average's validity is to go back in time and check the history. So let's take a little ride back in time with the 144 weighted moving average. Okay, we go back over. Okay, this is the first time we see it, and we get a giant gap up right, by the way, right here. If you are a swing trader like me, you need to know that this is a risk you are willing to take every single weekend that you hold, because this was a close and it opened all the way up here. It's 1,600 pips. I've charted on other ones on a trading view, and I've shown people this. Whenever people hold trades over the weekend, you need to know that you may have your entire account gone, depending on what happens. A nuke, something like that goes off somewhere, and the whole market's going to be absolutely insane. You're either going to be filthy rich or you're going to be blown out come the open. So 1,600 pip gap. Anyways, see this big old giant gap, come messes around, shoots up, hits it, but then it gaps up again above it, comes down, and then it just blows right through it. So do you really consider that? I don't really consider that respect. I feel like it was just price action, just jumping all over the place. It didn't care about the moving averages. There was nothing. These right here were totally irrelevant at this time. So let's go back a little bit further and look at that. Check that out. This is that 144, the weird one. This price action played around, shot up, hit the weird one that nobody else wants to use, and it bombed 1,000 pips. 1.13. Look at that. Almost 1,000 pips. That is a monster move. The weird one. Okay? So, this right here tells me this thing has put a huge dent in price action before. It could do it again this time. Tight stop loss. Let's see what happens. So that's what I do. I look back. I look left, look left, look left. So is this the only time it's ever been respected? No. Right here, didn't quite get all the way up there and touch it, but it got real close. And this is the 100 SMA. This is the 144. Whenever I've got two majors, you see these big old gaps between them. If I've got two of them crossing like that, and there's nothing else around them, to me it's usually pretty solid. It is usually pretty solid. So this right here, I don't know. I can't say that I would have actually caught this move because I like as low drawdown as I can get, and this would be an iffy one because I think there's like 30 pips or something like that between there and the moving average, and I don't know that I would have gotten into it or not. I can't say. This was way back in 2016. So, but anyways, this is the 144. Respect. Nah. Come on over here. Boom. Respect. Nailed it. Nailed the entry. This is what the moving averages do, man. I'm telling you, they are very powerful. Anybody who says that there's no use to moving averages, they don't see it. I can go chart, and show them that there is some serious strength in the moving averages. It's just knowing which one to use and knowing when to ignore them. Because look at this right here. If you would have tried to sell off this one, the 200 EMA. This is the 200 EMA. Let's see, when was last time? No respect there either. It was two of them. Still nothing. You got a little bitty bounce, and then it blew right through it. I don't know if I'd call that respect. I like wicks. Look, the 200 SMA has gotten more respect than the 200 EMA has. There's one wick. I look for those wick tips. The hard rejects are the ones that I like. I like to see if I'm gonna actually try to put my money on it. I want to see something that has done it before. I want to see that it has proved itself before, and that's the one they're using. Right now, to me, one of the hottest moving averages is the 50 EMA, and that's for anybody to take to the bank, or you can start using it, or you can just ignore it. I don't care. Right now, the 50 EMA, and that's why I covered in the room. And I said, after I said it again, after I posted it how many times the 50 EMA, I'm like, man, this is getting ridiculous. At this point, 50 EMA has played a role in USD, EUR, CHF, JPY, and the Australian dollar. I mean, that's insane. For me to post 8 charts, you know what I mean? And we got 5 of them that I had to mention the 50 EMA. There's power. There's power there. So take advantage of that knowledge and share it. And I want you guys to please be as active as you can. I'm as active as I can be, as you guys have seen. I'm in a whole lot of rooms wherever you met me at. I wanted to give you guys a little bit of insight on what I'm doing over here, why I'm doing it, how I'm using it, and how I want you guys to use it. So I hope that helped.